Hey everybody, Boris Stossberg from BK Forex. Welcome to our daily technicals. Euro dollar, more downside to come. Past performance not indicative of future results. Trading Forex pairs high level risk may not be suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you sustain and lost some of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Information including commentary, trade ideas provided by BKForex.com should not be relied upon as substitute for independent research, which should be informed before making investment decisions. BK4S LLC and BK4S.com are merely providing this information for your general information. The information and opinions presented do not take into account any particular individual investment objectives, financial situation, or needs. All investors should obtain advice based upon their unique situation before making investment decisions, and tailor their trade size and leverage according to their personal risk appetite. We're not responsible for any losses incurred in this investment made by readers or clients as a result of any information contained here. It would not render investment, legal, tax, or other professional advice, and if such advice is needed, seek competent professional counsel. Well, Eurodollar, obviously story of the day, continues to be. Let's take a look at the chart because yesterday we had the big break all the way down to 128.20. We took out the 28.50 level, which has been the key support level that we've talked about for a long time. But one of the interesting things that's happening sort of is that this support level now, though broken, is sort of acting as a stall. And it's not impossible to imagine a small retrace rally. The euro definitely has a potential for a short covering rally to 2900, possibly 2950, but overall it's very, very negatively weighted to the downside. And the gap really sort of was very weakly filled and then came right back down. When you look at the chart on a longer term basis here, we're definitely at certainly fresh year-to-date highs. This was a very, look at this ugly candle. This candle basically is, is a shooting star, almost a shooting star candle that starts at, rises to the top, ends at the bottom. Very, very negative. Tends to really be a good precursor of further downside price action. For the time being, 28.25 lows of the day. Obviously, that's going to be a key tell. If we can press through that, then 2800 comes into view. On a longer term basis, this 2700 is the major support on the trade as a longer term hold. And any kind of a comeback here really has to overcome tremendous amount of various levels. It has to come up 28,900, 2950, and obviously 3050, all the way over to retake this candle. If we get a move that retakes all of these levels, that would be actually quite bullish, but very unlikely given the way that we're trading right now. Very, very slow, small trade right now, as we just basically have a consolidative day for the time being. But as the day proceeds, we're closer obviously to the lows and to the highs. So a run through the lows here at 28.25 does open up the possibility for 2800, at least as the first test, and possibly even further more downside as we go along. Dollar yen also acting very weak, and we talked about this. Let me just go to the 4-hour chart and we'll see. We talked about the idea that how 94 was a key level break, and of course once it broke, it was kind of like a waterfall. What is interesting about dollar yen and worth noting is that 93.50s got bought up very quickly. This is generally looks to be a value proposition, meaning that if people came in, bought it very, very quickly, this seems to be for the time being operating as a reference source of value for the trade. So dollar yen could very well be consolidating here within this 93.50, 94.50 range with a little bit of an upward bias. A break to the upside here would be, let me see what the highs are, around 94.50. Could take us possibly to a recovery of 95. As this candle operates on a positive way, just the way as the other candle in the euro operates in a negative way, in a sense that this was a value proposition for the buyers, whereas that was a selling proposition for the sellers in the euro. However, we start drifting all the way down here, and we break the 93.50s either today or tomorrow. That would be a very negative occurrence because it would suggest that all of this value got erased, and then we have a possibility of moving all the way down to the 92s as the trade unwinds completely. We've been negative this trade for a while because of all the longer term technical overhead, as I've noticed at lower highs continuously right now. And in fact, the real operating high right now is, what is this? This is around 95, right? Is 95. So until and unless we take out 95, if we do take out 95, by the way, then this actually constructs itself as a more bullish posture. and presents an opportunity to run all the way to 96, because this would mark a short-term bottom. 95 would get taken out. We would have an easier way of clearing all this overhead, and it would have a potential for going to 96. But until we do that, downside still weighs, a little bit of consolidation, but 95, 93.50 acts as a pretty strong support level. So it could be a double bottom. Only if it's broken to the downside does it present a really strong selling opportunity as we go forward. Cable is not acting well. This was an interesting thing. Yesterday, we talked about the idea of 52.25 was the key breakout level. It failed. We took out 25, ran all the way up to the 50s, and just kind of failed. We died on the vine. And now we're consolidating. So until we get the 52.50 broken again to the upside remains mute. 51.50 is the key downside support, and then after that the 50.50 support. So we could see a little bit of burn and churn and possibly move down to 51.50. Definitely opens up the possibility for a full unwind all the way down to 50.50, and you would have a big distribution top in cable. We have to watch that carefully as the day proceeds. The one thing that has been acting well are the COM dollars, and you have to look at the Aussie. Aussie just made monthly highs at 104.80, and looks to be very, very promising for a possible move all the way out to 105. We talked about the idea how we've cleared a lot of overhead resistance here, and we certainly cleared. We're basically churning through this little bit of overhead resistance here, 104.75, right? And a breakthrough here, meaningful breakthrough, the 104.75. Opens up 105 and possibly around to 105.50, and you can see that strength in the Aussie dollar. You also see that strength in the Kiwi dollar, which is acting very well. It's had a big power move over the last few days. It tried to clear this whole overhead resistance at 83.50 for a move towards 84, and then the next resistance level after that is of course going to be 85. So they're definitely outperforming. Conversely, if you look at Euro odd, that is getting hammered continuously, and look at this move in the Euro odd here on a daily basis, and even on the 4-hour basis, still continues to the downside, and looks to be, if these trends continue, to be a 122 trade here to the bottom as we said, fresh year-to-date lows. So that's kind of how the story goes. The tilt is to the COM dollars. Euro remains very vulnerable, possibly small short covering rallies to 2900, but a break of 2825 opens up 2800 for us, and obviously I think opens up this trade down to 2200. And dollar yen consolidating, but not nearly as bearish as Euro dollar, in the sense that this 93.50 level operated as a pretty strong support level. So we have to watch and see how that resolves itself before committing. And pound just basically failing at the top and turning to the bottom. 51.50 key support break there takes us to 50.50, and only a break above 52.50 reestablishes the upside trend that we like to see. Anyways, Boris Schlossberg wishing you guys the best of luck and the best of trading. Hopefully the day today will be good. We'll see you later.